Ladies and gentlemen, welcome back to the channel. Today was not a great day for Tesla or for the broader markets, okay? Now, I'm going to just shoot it to you straight here in this video. And to be honest, the next 5 weeks just don't matter, okay? You really have to understand economics to, I believe, be in a good place over the next 5 weeks. What I mean by that is a lot of Wall Street, a lot of especially retail investors look at the markets and assume the markets are right? That's the craziest shit ever. Like, that goes against everything. The markets are usually not right, okay? Warren Buffett has said something like this, right? During a crash, Warren Buffett, I'll paraphrase here. He says you can watch a stock go down like 50% for no reason. Does Warren Buffett panic? No. Because it's the same business that it was yesterday, okay? Or before the crash. Now, I'm not trying to suggest we're going to see some kind of large, dramatic crash in markets. I don't think that is going to happen. But what I'm saying is, if we get these big red days, like Tesla down 4%, there may not be a logic behind it. It may mean nothing at all. Okay? Versus, again, a lot of retail investors that wake up and see Tesla down 4% and say, oh my gosh, what's going wrong? Like thinking you can understand logically why a stock like Tesla is down 4% today. You can't. There is no reason for this. I know that's a crazy thing to understand. It sounds crazy, okay? But that's the way it is. Let me give you a brief rundown of what happened today before we get into the larger topic of today's video and where stocks go from here. My expectations, again, over the next 5 weeks into the end of this year and 2026. I also have a clip from Tom Lee that I want to share with you as well in this video, where he says there is no sign that this market is slowing down anytime soon. And today really reinforces that for me, okay? You need these like red days every now and again to be reinforced of your bull thesis, okay? Because, it's kind of like opposite, right? If every day stocks are going up, I start to get a little nervous. Okay, so in case you missed it, which I don't blame you if you did, what happened today for markets was actually pretty straightforward, okay? So Trump ended the de minimis $800 kind of rule, okay? Which means you don't pay tariffs or duties on, $800 shipments or less, okay? He ended that globally today. Here's the important part. He ended it for China back in May. In 2021, it was found that 60% of these de minimis orders came from China. I would argue that as of May 2025, it was probably closer to like 70 to 75%. So the fact of the matter is, we've already went through the bulk of that disruption, okay? Now it applies for other countries. And sure, could there be, issues with certain products in certain areas? Of course. But is that going to push the economy into a recession? Is that going to cause meaningful inflation? No. What happened today was a reaction to this news because of the seasonal weakness period we are in. The fact of the matter is, over the next 5 weeks or so, any piece of small news could be amplified for little to no reason, just because of seasonals. Okay, much the same way as like a SPAC, right? If you've invested in a SPAC before, you know that the next 12 months following a de-SPACing is bad, okay? Like, historical performance is terrible. So what happens? Wall Street shorts those stocks. They short them to oblivion. They short them way more than they should, okay? They don't buy those companies. So there's virtually no buyers, and it's like a self-fulfilling prophecy, right? Well, same is kind of true with seasonals. Unless there is just so much in terms of good things happening, markets are likely going to fall. Okay? So that was the big negative news today that caused stocks to fall. does it justify, does it make sense at all why Tesla's down 4% on that? No. Tesla launched the Model Y Performance. Stock should have been up today. Okay, a month ago, the stock would have been up on a day like today. A month ago, the markets would have been up on a day like today. You almost have to like not pay attention to the markets, or try to only pay attention to like things that actually matter, because you know any small headline is going to send markets lower over the next 5 weeks. It's a self-fulfilling prophecy. The algorithms are programmed that way, that they say, hey, this is the average performance in September. We're going to sell and de-risk, right? That is what we're heading into throughout the month of September. And could it bring a little bit of a correction, if you will? Sure. Like, that's possible. But unless something dramatically changes, it's not going to change the theory that I have that really from mid-October through the end of this year, it's going to be really strong. Like S&P is probably going to hit 700 on the SPY, like roughly 9-ish% rally higher from here. Tesla is going to explode higher into the end of the year. And then 2026 is going to be a really strong year in general. Okay. Now, what happened today that was most important to pay attention to, that Wall Street completely dropped the ball on, okay, was actually in the GDP report. So GDP yesterday was estimated at 2.2% for Q3. It went up to 3.5%. The part that really matters here, okay, is the real gross private domestic investment growth. Okay, it was 4.4%, so really strong. It went up to 6.1%. A big jump. Basically, there's a lot of things that go into GDP. But if you want to strip through all the noise, you want to look at the domestic investment growth. Trump has mentioned this, like many others have mentioned this. You know, if the economy is truly crashing, you're going to see that represented in the domestic investment growth. Okay? Companies are not going to be investing. That's just pretty obvious, okay? So we've seen really good data today. GDP exploded higher today. In terms of the economic data, core PCE month over month, personal income month over month, and personal spending month over month all came in line with expectations. The deficit did come in a little bit larger than expected, which actually helps boost the GDP numbers. But again, it's the private gross domestic investment. Now, the raw fact of the matter is, this last earnings season was much better than expected. It was the strongest earnings season we've had in years, okay? Surpassing everyone's expectations. And essentially, tariffs are not really hurting companies nearly as much as people thought, and it's not hurting demand nearly as much as people thought. You mix that with today's PCE report that came in line with expectations, personal spending that came in line with expectations, and income growth that came in line with expectations, and you actually have a very positive backdrop right now. What you're seeing today is all just seasonals, okay? This is exciting, okay? What today really shows me also is this bull market is nowhere close to finished. Nowhere close. You know, again, as I've said in prior videos, I get nervous when stocks are too good. Like 2021, yeah, I was getting bearish, you know, like July or so. I'm like, damn, this is way too strong. You need bears to keep a bull market alive, because you need people that flip over to being, you know, bullish. It's funny, in the show that I'm watching right now on Netflix, The Titans of Wall Street, it's about JP Morgan, Goldman Sachs, like the founders of those firms, and, you know, how they conducted business and rose to fame back in the day. But they were IPOing companies, and, well, technically JP Morgan was trying to take over the, what was it? One of the railroads, the Pacific Union Railroad, I want to say. And this other individual, not Goldman Sachs, but a different firm, he was trying to hostile take over that railroad to create an intercontinental railroad. And JP Morgan found out about this and, well, started buying all the stock back. Okay. Right at the last moment, JP Morgan prevented the other guy, forget his name, from actually hostile taking over the railroad. But in the process, the stock went up so much that everyone turned bullish. And then people started to short the stock little by little. And then you got into a situation where the stock went up so much that short sellers got completely screwed, and it threatened to take down the financial markets back then. Okay? Because everyone got so bullish, the stock went up so much, it's unsustainable. It cannot last. Okay? You need bears. You need a healthy amount of bears for a bull market to continue. And days like today, the fact that seasonals even matter anymore makes me very excited. Okay, so with the backdrop that I'm talking about here, things look great right now, almost as good as possible. If inflation were to, come down surprisingly more than expected over the next couple of months, that's like the best case scenario. Growth is there, earnings are there, economy's doing just fine, consumers really unchanged. Like, there's no change in consumer spending behaviors. Walmart CFO and CEO told us that like 2 weeks ago. Okay. If we get inflation that comes down, that's going to be great. That's where I think you get the alpha here. Okay. Into the end of this year, it's going to become obvious that in 2026, inflation is going to come down. Economy is going to accelerate. Rate cuts are going to come. Real estate market's going to improve. And AI is becoming more relevant than ever. Okay. Whether you are a Mag 7 company and you have to continue to invest in AI, like it's an existential crisis if you do not. Google, as a great example, Google cannot slow down investing in AI because, as Google said before, they would rather overinvest in AI rather than underinvest and basically eventually go out of business. Like, that is what you're faced with. Okay, Sears is a great example. Sears used to be king back in the day. Well, they obviously had a misstep because Walmart and Target took that spot. There's a company called Woolworth, okay? Used to be one of the biggest retailers in America. The last store shut down in 1997, okay? What happened? Well, they were like the Amazon of the 1900s, and clearly they just didn't innovate, right? They didn't see the opportunity. They didn't take it. Ultimately went bankrupt, okay? And if you guys have not seen the new show, again, on Netflix, Titans of Wall Street, if you're a nerd like me, you're going to get a lot of useful yet non-useful information out of that. The history of Wall Street is pretty fascinating, okay? And in fact, fun fact, JP Morgan, the bank, but the person, JP Morgan, was kind of like the Federal Reserve before the Federal Reserve was created in 1913. The Panic of 1907 is partially the reason why the Federal Reserve exists today, because JP Morgan took all of the major Wall Street banks into a room and told them, we're not leaving this room until we raise $25 million. In today's terms, it's like $700 million to bail out the markets and to stop the panic, right? But again, back to the point. There is a lot of very positive things going on right now. And I really just want to hammer this home because there's a lot of retail that is bearish. Again, that is good for the overall market to keep this bull market alive. But I don't want you to be so blinded that you don't understand this is a once in a lifetime opportunity. Okay? You're never going to get another opportunity like this in your entire life again. You are at the ground floor level of the next revolution. Okay? This is the Model T moment for autos. Okay? This is the dawn of the internet, if you will, with AI. And there's good ways, there's bad ways to play this. Of course, I think I have the best way Link down below in the description of this video. We are going out finding small cap AI stocks that are going to grow into being behemoth companies in the next 2 to 3 years. That's where I think most of the opportunity is at this point. If markets crash and some of the most loved stocks go out of favor, then those would be opportunities. But as a general rule of thumb, if everyone loves a stock, the opportunity is gone, right? Tesla, great example of that, okay? Nobody loves Tesla. Nobody, okay? Even retail, a lot of retail doesn't love Tesla anymore. A lot of Wall Street is actually growing, into liking Tesla a little bit more, which is weird. But can't you see the opportunity here with Tesla? Nobody loves Tesla. Good news is not priced into Tesla stock. So over the next 12 months, you're going to see the evolution of good news getting priced into Tesla. An exceptional future getting priced into Tesla, where it is simply not priced into Tesla today. That's exciting. And that is going to drive a massive rally from mid-October through November, December, and into 2026. You could get a correction perhaps in the spring of 2026, but I think next year's pretty cut and dry. Inflation coming down, economy accelerating, consumer hopefully starting to recover from all the inflation that we've seen, stimulative efforts from the big beautiful bill, rate cuts, real estate's going to start moving, a focus on AI, innovation, and what I believe will be applying AI into the real world. Tesla, very important piece of that puzzle with robotaxi. There's nobody that is deploying real world applicable AI like Tesla is. Tesla really doesn't have a competition in that, in terms of that. Trade deals hopefully are done and finalized by the end of this year into 2026. I struggle to build a bear thesis here. Okay. We don't go into recessions anymore in this country unless there's shock events, okay? And what really causes a shock event at the core of it is panic, right? Like whether it's 1907, the Depression, or some of the panics in the late 1800s that did cause like serious economic harm, okay? It started from a panic that stops investment. I don't see a panic that's going to stop domestic investment anytime soon. Consumers don't just change the way they spend money at all. This is, I believe, truly a once-in-a-lifetime golden opportunity coming. I don't know how else to explain this besides a 30-minute long YouTube video. Now, ladies and gentlemen, I do want you to take a listen to this clip from Tom Lee. Again, if you don't agree with what I say, maybe you factor in what he says with a little bit more credibility. I just want to make sure each and every single one of you guys does not miss your opportunity, because this is when you're going to make your fortunes, okay? Crazy thing about getting rich is it seems like nothing is happening, and then it all happens at once. All of the work that you put in is realized basically at once or during a short-ish time frame, okay? It's like people that work on themselves and work, Jensen Huang's a great example. Like, dude just worked and grinded from the 1990s, when he quit his job at Denny's as a hostess. The dude's had 2 jobs his whole life. He was a host at Denny's and then founded NVIDIA. It looks like, overnight success from Jensen Huang being a superstar to where he is today, and it really took decades. No, I don't think it's going to take decades. I think your moment is coming, but you have to understand that it's coming. If you don't understand it's coming, you won't be ready for it, you won't be prepared, and you won't capitalize on it. I am here to tell you that moment is coming, and you need to be ready for it. So check out what Tom Lee has to say in this clip. But that is going to do it for this video. You guys have a great weekend, and I will see you in the next one.
I'm going to shut up because Tom Lee is here on set. Tom, thank you for coming on. Really appreciate it.
Yeah, great to see you, Brian.
I know a lot of people want your take on NVIDIA, and we'll get all that stuff. How has it been in April? You remain bullish even when everybody was running around with their hair on fire. Is it hard? Like, do people come at you and be like, how could you be so bullish all the time, Tom Lee?
Yeah, I think that we get more criticism than positive feedback to any of our views. I mean, if someone follows us on social media like Twitter, or if you look at the comments on our YouTube clips, or even sometimes unrequested inbound emails to our firm, usually it's criticism.
Yeah, it's amazing what people can do when it's anonymous, right? And they write in whatever. But those people, you've been right. I mean, you've been bullish. You've stayed long. You've stayed strong. What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology because no one likes to lose money. It's more painful to lose $1 than the joy of gaining $1. But what we did was we took a step back and said, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy. And that was our advice to clients.
Yeah, and is there anything that you see in your research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon?
We don't. We for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. We don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle for AI.
Okay, if I had to take the other side of that trade, and who am I, but we'll talk about this, by the way, with Christina Partsinevelos coming up soon, is that people are spending a lot of money on AI, the Metas of the world, the XAIs, the Googles. They're buying a bunch of NVIDIA chips. They're building out power data centers, and all that's inflating the market. Are companies making any money from AI? They're spending a lot, but are they making any?
That's a great question.
Because if they're not, maybe they stop spending so much.
Well, I think that when you look at the early builds of any new wave, and I think wireless is a good example, first is the infrastructure that gets laid. So that's the LLMs and the data centers. And then what happens is you have critical mass, and so then the application layer starts to emerge. That's exactly what happened with wireless. And then that's when, not until 2007, that the iPhone came along, 15 years into that cycle. So I
was thinking more like Global Crossing-ish.
Yes.
Right? Somebody paid, and if you're really young, Global Crossing was a company that spent billions and billions and billions of dollars laying actual physical cable around the oceans, the world, to which eventually Global Crossing went bankrupt. But those cables are still being used today. Thank God.
Yeah, all that fiber.
They spent that money to do that, even though it sort of cost them the corporate entity. You're not seeing any of that now.
That's right. And in the Global Crossing case, the second owner of the hotel made a lot of money.
Yeah, second owner.
So I think that we're now at the phase where we're going to be thinking about things of like security around AI, proof of human or whatever. And we're going to see companies leverage AI like the JP Morgans and the Goldmans. So there's another wave of opportunity coming where it's exactly what you're saying. We got to the point where AI is good enough that companies can really now actually improve their business strategy. So I think there's still a lot of positive to come.